please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
On to the top story. The stock market was rocked by a sudden plunge in financial shares. Markets saw panic selling and a V-shaped recovery. Nifty saw a sharp fall around lunchtime and breached even the 11,000 mark, but recovered by close to end only 1% lower, while the Sensex breached 35,000 and was down over 250 points by close. Banks shed 652 points to end slightly above the 25,500 mark, while the mid-caps tanked about 450 points. We spoke to a host of market experts to decode the sell-off. Here's what market veteran Madhu Kela, Nilesh Shah of Kotak Mahindra AMC and Saurav Mukherjee of Marcellus Investment have to say.
It doesn't look like any systemic or any big fundamental reason for this kind of decline. I think this is more tactical or technical in nature, wherein the over-leveraged position in F&O segment is getting sold off. And back of all the rumors which are there, it got just accelerated. These kind of panic reoccur time and again because whenever the sell-off happens and whenever the positions have to be squared off, they get squared off to whatever level it goes to. And that is what we saw in the morning. I don't think the repeat of that kind of panic should happen.
If you have an NBFC, which are generally leveraged between 6 to 10 times, and they have to keep on repaying maturing obligations, but they don't get refinanced for a variety of reasons, then no NBFC or a financial company can survive. So should we convert a liquidity crisis to solvency crisis, or there should be a backstop for liquidity crisis? That answer will actually determine what happens to the entire NBFC. There are specific companies which could come under pressure. And we have seen in the past RBI opening up special facility to save banking system. And it was not that banks were in solvency issue, they just had liquidity issue.
Rates are going up, the currency is under pressure, liquidity is tightening. I think that's the broad backdrop. I'm not underplaying the Divan paper being sold by DSP at 11%, but I'm not so sure how much importance we should attach to that. Clearly, liquidity tightening, potential RBI intervention in October to hike rates, I think is the bigger challenge.
NBFCs came under pressure as DHFL lost 10,000 crore rupees in market cap after it plunged about 57% in intraday trade, while Indiabulls Housing saw a decline of 30%. What led to this fall? Mutual fund player DSP has confirmed to CNBC TV18 that it has sold DHFL papers worth approximately 300 crore. We spoke to Hemendra Kothari of DSP Mutual Fund. Here's what he had to say.
Entire newsroom and a lot of WhatsApp groups active with this, that DSP MF has sold quite a bit of paper of DHFL to meet liquidity. Can you confirm or deny that?
It happened that way. It is not much amount. It is just 200 or 300 crores has been sold.
Yes, 300 crores.
About
300 crores on Wednesday, Mr. Kothari, and 70 crores today. I just want confirmation on those numbers.
70 crores you have gone crazy. It is not correct statement. And we have not talked about more than 200-300 crores. That is all the total figure has been sold.
Infrastructure Leasing and Financial Services, or IL&FS, has defaulted during the week in several debt obligations as the group faces a liquidity crisis. The company was unable to service its obligation on interest payments on non-convertible debentures that were due yesterday. And another big development in this turmoil came last night with the resignation of MD and CEO Ramesh Bawa. Lata is here with more as things get worse at the IL&FS group.
People now can see the pattern. Ravi Parthasarathy distanced himself a year ago and then resigned even as non-executive chairman. He had run the company, for a better part of 3 decades. So the writing was on the wall, and now more people at the top echelons are resigning. So nobody wants to hold the baby. It's too hot to handle. That's one development. The other development is that Aditya Birla Finance Limited, who are one of the creditors of 2 SPVs of IL&FS, have filed an arbitration application at the Delhi High Court. And the Delhi High Court has just told IL&FS not to transfer any of its assets till the next hearing, which will be on December 7th. So people are now dragging it to court. It's only if someone drags it to NCLT, then it's finished, most of the payments will stop. So things are looking like imploding. But, it can still, if no one takes it to NCLT, it can still survive by merely, reneging and people taking a haircut. And it may not become a serious problem. With respect to the other issue, well, to some extent, the IL&FS issue is creating a liquidity problem because some funds are faced with redemptions. When they are faced with redemptions, they're going and selling other kinds of paper. And probably because of that, DHFL found it difficult. A fund which was selling the DHFL paper did not find buyers and sold it at a higher yield. And that also spooked the market. This is what you call contagion, things are already tight, and because one person who was rated AAA suddenly went to D, the market is afraid of all kinds of paper, or only wants to go to paper that they completely trust, like say the HDFC paper. So you could see this contagion now spreading to other paper as well.
I think it's quite clear that IL&FS would need some sort of extraordinary support, and it's not obvious that that sort of support will be forthcoming. So there are, I can't see any clear and obvious way out of this issue. So then when we think about the banking system, we would assume that a large part of this exposure will become NPL. Of course, the loss given default would ultimately vary, depend upon exposure is at what level to which project and what's its status. But as a first step, I think our base case is that most of it will end up in NPLs.
Fuel prices notch another record high with a 11 paise increase in petrol, which is now selling in Mumbai at 89.8 a litre. Meanwhile, diesel remains unchanged at 78.42 per litre. Time for a break. Up next, market regulator SEBI tweaks its April circular. Details on this when we return. Welcome back to Business Saturday on CNBC TV18. Well, in a U-turn, market regulator SEBI has tweaked its April circular, which had earlier barred NRIs from being beneficial owners of FPI funds. The regulator has watered down the KYC rules following recommendations from a panel led by former RBI Deputy Governor H.R. Khan. Surbhi Upadhyay joins us with the details.
SEBI has clarified that this whole issue of beneficial ownership, this is only to ascertain KYC norms, and it is not really to determine which FPI can or cannot be managed by a person of Indian origin, whether a resident Indian or an NRI. So this in itself is a huge relief for the FPI community. The circular then goes on to enlist certain thresholds. What it says is that if you are an Indian manager, individual Indian manager, and you're managing foreign money, then in that particular fund, your own interests must not be more than 25%. And as an aggregate, all the resident Indians and NRIs or OCIs, that's overseas citizens of India, their interests put together should not cross 50%. And in my discussions with the FPI community, these thresholds seem fair, and very rarely do we see these thresholds get breached. So this should not be a problem. Also, the circular clarifies that as long as these FPIs are well regulated in their home jurisdiction, and they've also registered with SEBI, then control is not an issue as well. It is all right for a professional Indian manager to go ahead and manage and run this foreign fund as well. Last but not the least is a long grace period that SEBI has provided. There's a whole 2-year window ahead to comply with these regulations for existing FPI structures, and even new funds that are coming in from the date of registration, even they get 2 whole years to comply with these new norms. So in effect, the whole FPI furor, the entire matter has been put to rest, and at least this is not a controversy that the market needs to worry about.
Thanks, Surbhi. The insurance regulator IRDA has raised the mandatory personal accident cover for vehicle owners to 15 lakh rupees. The regulator has said that a premium of 750 rupees per annum will be applicable for the cover. Yash Jain joins us with the details. Yash, why has the regulator increased the personal accident cover?
First, let me very quickly put in context the whole reference to the story. Essentially, motor insurance has two important elements. The first one is own damage, which takes care of the liability of your own car in an accident. And the second one is the third party, which takes care of the liability coming from the second car which is involved in the accident. Now, what the insurance regulator has essentially done is that it has decided to raise the minimum cover under the personal accident, which is a part of third party, and it has decided to take that cover to 15 lakh rupees, the minimum cover, from the current 1 lakh for two-wheelers and 2 lakh for private cars. Now, it's not just the cover which has been increased, but the premium corresponding to that cover has also been increased. Two-wheeler, the current premium is 50 rupees and private cars is 100 rupees. That has directly been increased to 750 rupees for both category of vehicles. Now, what we're given to understand is that this will be a very big impact as far as the insurance companies are concerned, because in this particular segment, which is personal accident, till now the claims were almost negligible. But now every accident which really takes place, the minimum cover or the claim which any car owner will be eligible for would be 15 lakhs. So yes, everyone would be more aware about taking this particular kind of insurance. But yes, the insurance companies, the claim pressure will also be very huge.
Yeah, Shen, thanks for that. On to a CNBC TV18 exclusive. Sources tell us that at least 17 companies have come under the lens of the National Anti-Profiteering Authority for alleged unfair profiting. And that's not all. There are about 100 more companies that have been approached by the Directorate General of Anti-Profiteering. Timsi Jaipuria joins us with more details. Timsi, which are the companies that have come under the NAA's radar?
Well, government has stepped up action against profiteering under the GST regime, according to senior government officials. The National Anti-Profiteering Authority is currently probing 17 cases of profiteering against majors such as HUL, Subway, Lifestyle, Jubilant, McDonald's, Lodha developers, to name a few. Remember, till now, NAA has come up with 7 orders, and some of the crucial observations from these 7 orders includes the fact that NAA is not a price regulator, and the aim of the authority is to ensure that the price benefit that the government wants to give gets passed on to the consumers. Meanwhile, officials also highlighted that the DGAP, or the DG Anti-Profiteering, is also currently investigating about 100-odd cases of profiteering, again against majors such as Patanjali, Johnson & Johnson, Nestle, P&G, Pizza Hut, to name a few. Meanwhile, on a detailed analysis of all the complaints that have come in so far, maximum complaints are against real estate developers, which are about 200-odd numbers, followed by the FMCG and the consumer durables sector. On the other hand, several complaints which are under consideration at the various levels of screening and standing committee includes against majors such as Amazon, Domino's, Coca-Cola, Sony, Blue Star, HP Printers, Philips, to name a few. One must note that under the anti-profiteering workflow, the complaint moves from screening committee to standing committee. Standing committee then finds a formal investigation and files the complaint again to the DG Anti-Profiteering, which conducts a detailed investigations by getting in touch with the company and the complainant, forming an initial report and handing it over to the National Anti-Profiteering Authority. The authority then conducts a fair trial before passing an order. So we'll keep you posted on what's latest at the anti-profiteering level. Back to you.
Thank you, Timsi. Now to the big political story. Indian government suggested Reliance Defence as partner for the Rafale deal. That's the word from former French President François Hollande in an interview to French publication Mediapart. This statement contradicts the government's statement so far on the fighter jet deal. When asked how and by whom was Reliance Defence selected, Hollande answered, and I quote, "We didn't have a word to say about that subject. The Indian government suggested this service provider and the sort negotiated with Ambani. We didn't have a choice." End quote. The Defence Ministry has responded to Hollande's statement. The ministry says the report in the French media house is being verified and went on to say that they reiterate that neither Government of India or French government had any say in the commercial decision. On that note, let's hear out an excerpt from our exclusive conversation with former Finance Minister P. Chidambaram on the latest twist in the Rafale saga.
Mr. Chidambaram, we have now heard from the former French president telling a French media publication that the choice was not with the French government and that the Indian government decided on the company that Dassault partnered with, which happened to be Reliance Defence. What do you make of this revelation?
Well, it's exposed another lie of the Indian government. In the Rafale deal, as I had just tweeted, we have not got any planes. We've only got a series of lies. And this is one more lie which has been exposed by no less than the former French president, who should know, because he was the other principal, along with our Prime Minister, who concluded the deal. So the first name that the Indian government ought to have proposed to Dassault and to the French government is HAL. If after that they had rejected HAL, that's a different matter. But did you propose HAL? But from what the defense minister has been saying over the last few days, she thinks HAL is incompetent to make aircraft. And certainly they would not have proposed anybody they consider incompetent.
You know, Mr. Chidambaram, since you bring up the defense minister, Nirmala Sitharaman, sir, let me take you through what she has said in a statement. In fact, she goes on to say that it was the UPA that dropped HAL from that proposed transaction. That it was on account of the UPA that HAL was left out of the deal.
We didn't drop HAL. We proposed HAL. HAL had a work share agreement with Dassault. The negotiations could not be concluded on who will give the guarantee for the 108 aircraft that will be made in India based on transfer technology. But our choice of a partner to make the aircraft was always HAL. Now here we're not talking about making the aircraft. We're talking about an offset partner. Is the government of India saying that HAL is incompetent to make aircraft? HAL is incompetent to be a Dassault partner? Offset partner for Dassault? I mean, what is it? They have no belief in the competence of HAL in any matter whatsoever? We are talking about not HAL as a manufacturer of the aircraft. Right. We're talking about HAL as an offset partner to supply some equipment to fulfill the offset obligation.
Mr. Chidambaram, so in terms of next steps now, you've taken the matter to the CAG, you've sought a CVC probe, there is a separate PIL in the Supreme Court. What will the next step be in the Congress's strategy on the Rafale matter?
All I know is that the party has officially approached the CAG, and I think they are approaching the CVC. So this matter deserves to be examined thoroughly.
Meanwhile, the French government has put out a statement this morning saying French companies have full freedom to choose Indian partner that they consider most relevant. The statement also says that the intergovernment agreement signed between India and France on 23rd September 2016 was only to ensure delivery and quality of 36 Rafale jets, and that the French government had nothing to do with choice of Indian partners for French companies. Time for a break. Up next, we get you an update as to how the US markets closed for the week and what are the triggers going forward. Stay tuned. Well, with that, it's a wrap on this edition of Business Saturday. For all the news and updates, stay tuned to CNBC TV18.